Now, in view of the tick in oil, the rise in oil prices, I mean, $77 per barrel as at this morning, do you see a tweak, you know, in the budget by the time it's released at the end of the day?
Yes, I think that is going to happen because we've seen the budget, the country going on a borrowing spree all these years. So with the increase in oil price, meaning that government is going to find the money to close the deficit gap that we have in the budget. So I'm sure that something is going to happen.
Well, this is not the first time, you know, we're celebrating high oil prices. We had oil prices once at what, 144,
yes,
you know, dollars a barrel once. What do you think should happen differently this time? We're going to have the same narrative.
Sure, that's actually why I think it's important for us to look at the economy from 2008 to the current period. So whereas the government seems to be, you know, very loud on expansionary fiscal policy, expenditure, and all of that, so reflating the economy from recession, they said they're going to reflate the economy, but we haven't seen that. Because when we break down and disaggregate government spending as a percentage of GDP, you realize that we're actually operating at a very low level, lower than what we had, for instance, in 2008. So what government is spending today as a percentage of GDP, remember we rebased our GDP some years ago, so from a 200 billion GDP, we now have an over $500 billion GDP. So the government is spending much less than what they spent in 2008. So that's the truth of the matter. So when they say they are reflecting, so I think there is some kind of money illusion that the government is suffering from. And again, we look at the monetary policy, we've seen a spate of monetary tightening from 2008 to current time. So for instance, in 2008, we had the MPR at 6%. Today, MPR is about 14%. And then also, we had the cash reserve ratio of the bank's CRR. It was 1% in 2008, and today it's 22%. So that doesn't leave enough money for anybody. So we have what the implication of that is crowding out for the business, for private sector who can't have access to funds. So that is it. So it's not just about the oil price climbing. The management of the economy is also of macroeconomic.
Talking about that management, I want to hear about the strategy. What strategy would you prefer?
Now, we've seen where now government has access to funds. I mean, the oil price is increasing. We've seen the external reserve, no matter the argument about it, you know, rising to above 40, heading towards $50 billion right now. So I think the necessary thing to do is to begin to loosen up a little bit. Okay. You know, make credit available to the private sector so that manufacturing can have can breathe a new lease of life, because we haven't seen that happening. And again, when we look at the stock exchange, so it's not just that. Nigeria's stock market as a percentage of GDP is just 11%. Egypt is 9%. Then we have countries in Africa that are up to 80 and more than 100% of their GDP, which is enough. So it's actually beyond the threshold recommended by the World Bank. 11%, you know, as a percentage of GDP is quite low. So we need to, so the economy has to get to the point where manufacturing and industrialization happen so that we have more companies listed in the stock exchange.
That's a very key point, but you see, it's a point that has been raised over the decades. I mean, it seems Nigerians have their solution before them in terms of what to do with the economy. The World Bank now is projecting, what, a 2% growth that might take place, and that will be driven by oil. I'm saying to myself, I'm not the expert here, but I'm saying to myself, it's the same narrative around oil. So the question is, what can we do now? We see oil prices picking up, which is what you just mentioned. Let's begin to, you know, kickstart the manufacturing sector, the industrials. So what do you think has been stopping the government all along?
Well,
I mean, it's not rocket science, is it?
Yeah, well, I think it's a little bit of a rocket science because we haven't been able to do it for many years. So I think it's rocket science for us. Yeah. So what I think that is necessary to happen, because I'm not actually so happy that oil is climbing up. Okay, because
you're not happy about it.
I'm not so happy because it's the return of business as usual. For the past 3 years that we've been hard hit by the low oil price, we've started to look at ways to diversify the economy. So with the oil price going up now, so we're going to lose that narrative. So everybody's going to be looking at oil. So it's going to be the return of the Dutch disease years. So where we have arbitrary rise in everything, arbitrary money, you know, which does not translate to real wealth. and also does not give us that incentive to begin to grow the economy in ways that are more sustainable. So I'm not so happy that oil is rising, because we're going to lose that track. All
right, then. Clearly, we are technically out of a recession. I like to always use that particular phrase borrowed by from the federal government. But then we have when we talk about the fact that Nigeria's unemployment and poverty rate, on the other hand, is on the rise. Help me reconcile what's playing
here.
So
it's this misalignment between the monetary policy and the fiscal policy. Government says they're going to reflect the economy. So we have seen the economic recovery and growth plan, which are built on, increasing the availability and access to funds, to grow the real sector. But when we see the monetary policy stance, it contradicts that. So when you keep the MPR at 14%, and that increase, the typical interest rate you find in the bank lending rates is about 28 to 30%. But who's going to borrow at that level? So who's going to create the jobs? So poverty is a resultant effect.